Hey guys, Akil Stokes here. Welcome back to another episode of the Trading Coach Podcast, another video version. So make sure you head over to Spotify or YouTube to check it out. We are going to look at a few charts. If you guys are brand new to the show, welcome. I am a trader. I'm also a trading coach over at tier1trading.com. And this is a podcast where I share a few valuable trading lessons from not just my journey, but from the current journey that many of the traders that I'm working with are going through. Today, we're going to be talking about the benefits of AI and how it could be used to help the average trader progress in their journey and make life a lot easier. I'm also going to share with you a change of opinion somewhat on a very hard stance that I've had about the markets from pretty much when I first started trading. So should be a fun episode. So to kick things off, just to give you a little bit of a background information, the idea for this podcast comes from a conversation that I was having with one of the traders that I'm working with on the platform. The trader is currently in the strategy development process, and he's working on a strategy on the 1 minute time frame. Now, if you know me and if you know everything that I stand for in life, I am highly against trading on the 1 minute time frame. And I should say this, I have nothing against the time frame. I do have something against the time frame. I think it's a very difficult time frame to get relevant information off of. You see, normally how trading works, or not normally, but how trading works is this. The higher the time frame, the more relevant the signal, but less signals. The lower the time frame, more signals, so more frequency, but the less relevant the signals are. Think about the markets as being very similar to making decisions. In a way, that's exactly what it is, right? We know that a candlestick chart is nothing more than a visual representation of all of the market's participants and the actions that we are taking. And the specific actions that happen during trading are buying and selling decisions. When am I going to buy? When am I going to sell? How much am I going to buy? How much am I going to sell? Where am I going to buy? Where am I going to sell, right? That's pretty much all the market is. Why that happens is due to various reasons. Right now, we're in a very unique situation. I told our traders this morning in the live room, where we have a lot of stuff happening. We have criminal investigations of our Fed chair. We have Supreme Court hearings for tariffs. We have Supreme Court hearings for the firing of another FOMC person. We have, Greenland that wants to be invaded, attacked, taken over, whatever you want to call it. Japan intervention, Japanese politics, just to name a few. It's been a very wacky time. Although that Euro-Yen trade from our weekend's Trading Edge video made some big bank this morning, 175 pips. Yeah! So I'm not too mad about the movement. Movement equals opportunity. The point is, we have a lot going on, and all of this causes us to make decisions. So think about it like this. If you were in a store and there was a product that you were interested in buying and it was at a certain cost, if I gave you a day, so this would be equivalent to the daily chart, to make a decision on if you should buy or sell that product, right? Think about impulse buying. Do you think you would make a better or worse decision? And you can leave this in the comment section below if you want. That way we can see all the different answers that traders put in. But I think most of you would make a better decision, right? The old saying is that if you go to the store, back when people used to go to malls, but if I guess you go to a website and you see something you like and you click off that website and you come back the next day, if you still really want it, then it's probably a good decision. So if you have a day to analyze data, information, take everything into account, you're probably making the most informative decision possible, right? So better decision, better signal. If I gave you that same situation where you were in said store or online store and I said, hey, you got to buy or sell this, and there's a countdown clock saying you have 1 minute to make a decision, right? You're probably going to make more of an impulsive decision. You're like, I got to get it now because countdown clock is running out, or I don't want someone else to take it. Boom, right? You don't have enough time to gather the information. So although you make more decisions, they are kind of less good decisions, for lack of a better term. So that's the difference between higher time frames and a lower time frame. So if we take a look at a minute chart, and I'm probably going to have wobbly candle because I'm at the wobbly chart because I'm at the standing desk right now. But here's a look at the daily chart. And again, markets move the same on any time frame, up, down, sideways. But here's a look at the daily chart. And then if we go down to a 1 minute chart, which is here, right? yes, you're going to see the same, sorry, I can't see the camera. There we go. You're going to see the same type of movement, again, up, down, and sideways, but you're going to see a lot more sporadic action. And if you actually look at this live, it would be even worse. For you guys that are looking to trade lower time frames, and I promise I'll get back into the subject after this, I would actually recommend a range bar chart or a tick-based chart, because although it could be representative of a lower time frame, you're going to get much more of a smoother movement on here. So like here's a 13 range bar chart, for example. If we went down to a 5 range chart, meaning each candle moves within a range of 5 pips, you can just see it's a much smoother ebb and flow, and I'll touch on this in the beginning. So anyway, our trader is working on a strategy on the minute time frame, and the old me would be like, no, never do that, get far away as possible. But there's one big difference here. If, no offense, you guys were to ask me that question, because I don't know you, because I haven't worked with you, I would assume that the reason you want to be on the minute time frame is strictly for frequency. You see it as a way to get more signals, which you see as a way to make more money. And if you guys remember what we spoke about in the previous podcast, the time versus money myth is not necessarily true, meaning that more signals, more time on a chart doesn't necessarily equal more profit. In fact, for most traders, it's the exact opposite. It's the more opportunity to make mistakes. It's the more opportunity to lose money. It leads to going broke quicker. However, because this trader is on the platform, meaning that we know he's going through the courses, he's learning the correct way to trade, I'm assuming that he has a much better knowledge and is approaching it in much more of a professional way. So although I would never trade the minute time frame myself, I'd rather go to a range bar or a tick chart if I had to. I'm not going to take the stance that says you can't do it, because that goes against everything I believe, in that you could be successful in any possible way as a trader as long as you stick to a few core principles. So when the trader initially reached out about his situation of the minute chart and was asking me questions, I gave him an example of what you need to be careful for. The trader at this time had committed backtesting and the numbers looked promising, and it reminded me of a story that I had when I created a strategy on the range bar chart, right? It was a very simple strategy. It was on a low range bar chart for day trading, and it had a high frequency of trade signal. And I did all the back testing, and I did, it looked good and everything like that. It showed promise. The hypothesis was proven correct. However, when I started trading live, there was a big difference. And the big difference was that, well, in back testing, I can sit here, I can stare at a candle, I can have the perfect entry, I can have the perfect exit. There's no slippage or anything like that. I get in at the perfect deal. And with this strategy, specifically, the margin for error was really, really small. It was more of kind of a frequency strategy. So it was a 1-to-1 risk, but the profit or the win percentage was, I think, like 60%. So 6 wins out of every 10 trades. So that it was based on just like, not a big risk reward, but based on just like win, 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 win. The problem when I traded it live was that, well, because of the speed of that time frame, the lower time frame, my entries were often a little bit late. I mean, I didn't get in at that perfect area. Rather, I would get in a little bit higher than I planned, which would take my risk reward from being 1-to-1 to negative, which when you have a negative risk reward, and hopefully in editing, I'll show you kind of the matrix spreadsheet that shows us risk reward. If I have a negative risk reward with a 60% win rate, after you take spreads and commissions out of the way, it's pretty much break even at best. So I learned from that there's a difference between backtesting and live trading, specifically when it goes to those lower high frequency time frames. And that's what I told the trader. I said, just be careful of that. So he came back to me after kind of going back into the lab and doing his homework, and he told me this. It's going to be a little bit long, but it's valuable, I promise, so make sure you listen up to it. He says, "Hello again." I thought this is first thing in the morning, so I'm believing he's like me. I jump out the bed, I'm like, yay, let's get the day started. He said, "Hello again. I thought I would keep in touch to keep myself grounded. I hope you don't mind me bouncing my feelings off to you, smiley face. I've continued to backtest my strategy based on the 1 minute MNQ. I've got a few hundred data points now that I'm using ChatGPT to help me refine my entries," right? There goes the AI helping, and we'll touch a little bit about that later. "I'm going to try and capture another 20 points per day. I've also tried trading it a little on the prop firm account, and I've gotten positive results. I was finding I couldn't enter the trades fast enough, as we spoke about before, so I moved over to NinjaTrader and I've written a bot to enter the trades for me. If I say go in each occasion, I've written the bot to enter the trades for me. I really like this because I just have one button on the screen to press, so it's easier to keep in a trade. I have sort of psychologically separated myself from the entering and exiting process, which is really helpful. So what our trader is saying now, like, I don't know if you guys have ever day traded, right? But trading is tough in general. There are emotional swings, there's emotional battles that come, whether you're in a trade, whether you're waiting for a trade. What makes lower time frame trading harder, and this is why we recommend newer traders start with the higher time frames, because you have time to look, analyze, get away, reset, reanalyze, double check, get away, reset, really calm those emotions down. When you're on a day trading time frame, it is fast paced. I'm trying to think of like a sports analogy, since I'm usually good at that, but it's fast paced. Everything is coming at you really, really, really quickly. It's really easy to get overwhelmed, and like we get so built up that we make mistakes, and it's hard to separate yourself psychologically. So he said by having this kind of simplified version where he's not necessarily doing analysis, he just has the button and it's like buy or sell, he's kind of taken himself out of the equation. And that's one of the benefits of systematic trading or automated trading, is that you separate, for the most part, yourself and your psychological demons from the actual trading. Again, not 100%, because you still know what's happening in the background, so you're still like, right? But you do it for the most part. All right, so as I scroll up, and I can't see because I have the camera right in front of my thing, when I backtest, I'm hitting about 70 or 80 triggers each day. If I just apply my basic rules, I'm hitting about 65% win rate. With ChatGPT doing some correlations for me and some of the additional parameters that I'm recording, I can reduce the number of trades to about 40 per full day, but increase the win rate to about 80%. So what the trader did is focusing on quality over quantity. At first it was like, how many possible trades can I take? And what they've done is they've dug into the numbers. They've used AI, ChatGPT, to help them dig into the numbers. And they said, hey, well, instead of taking this many trades, right, 70, 80, what if I take out kind of the bad signals, right, whatever the filter was, and now I'm down to 40, but I've increased my win percentage, right? So they've sacrificed frequency for win percentage, which in my opinion is a good thing to a certain extent. There's another story I've told you this before, about the trader that created a system that was so refined, it was like 99% correct, but it only gave 2 opportunities a year. And how when we were at this live meeting, we brought a coder in, we're going over this to teach our traders how to, how you can build a strategy and then code it and have it automated. We're looking at him like, we're looking at each other first. I'm looking at Todd and Jason. I'm like, who's going to say it? Who's going to say it? And some finally were like, hey, like, good system, David, but I don't know if 2 opportunities is realistic, right? It's good in real life, right? Because it's like 99%. But like, you think about your margin for error. When you're taking 80 trades and on a minute chart, if you miss one, it's no big deal. I would say I take about probably 200 trades a year in my personal trading. So like, if I miss like 2, 3, 4, 5 trades, like I've still got 195 trades, right? That's still a good enough, a good enough sample size to extract my edge. If I've got 2 trading opportunities a year, like what if I miss one? Like what if I just wake up sick? Or what if I have a family emergency and it happens to be on that one day that I miss a winning trade? I'm screwed for the year. Like, and then what do I do the rest of the time, right? Just make mistakes and stuff like that. So like, to a certain extent, but the idea of quality over quantity is something that I certainly agree with, and I'm proud of this trader for bringing that number down, but bringing that win percentage up with it. All right, where was I? So with these parameters, I can reduce the number of trades to about 40 per day, but increase the win rate of about 80%, to about 80%. The strategy is a 1R. If that holds up, it means I can get 20R a day, or perhaps 30R if I worked extended hours. I performed 200K. I've performed a 200K Monte Carlo on it. and get very similar results. And what he means by Monte Carlo is not that he's taking a trip to the French Riviera to gamble. Rather, it means like a simulation of different numbers and different outcomes based on his system and strategy. Although a trip to France would be a cool business excuse to backtest. Anyway, he goes on to say, all this seems far too good to be true. I'm keeping my feet on the ground and I'm trying to break what I'm doing, but I haven't been able to yet. And by break, what he's doing is like he's trying to find like the trouble issues, like the problems, right, to make the strategy fail. So not being able to do so is actually a really, really good thing. So trying to break what I'm doing, but haven't been able to do so yet. I'm getting to know when it fails and when it has a high chance of working. I'm going to work back testing faster and slower time frames to fill in the gaps for when my strategy isn't working. Having said all this, what would you suggest I do next? I'm feeling confused. Is there any way you could suggest to attack the strategy in order to disprove its resilience? My thoughts are, this can't be real. If it is, I could make 100 R a week. Thanks for any advice you can pass on. So the first thing I want to start with is really the bigger picture. And this kind of follows up on, Trading Coach Podcast 1267, I think it was. We were talking about copying other traders and having to correct expectations and not shooting for perfection. I understand and I'm fully for trying to break your strategy, right? Whenever we have a strategy, we tend to have a bias. I remember when Darren invented or founded the cipher pattern and he came back, he's like, hey, I found the cipher, it's 80% correct, this is amazing. And we had to say, hey, like, I want you to go back and I want you to find it again, but I want you to look for as many losers as possible, because the human element of testing is that when we're developing a strategy, we want it to work. Therefore, because we want it to work, we're more likely to see the times that it does work and kind of ignore the times that it doesn't work. That's one of the hardest mental battles to overcome in manual testing. So to go back and look for losers, which is something I always do in my testing, I always look for losers more than winners, and anything that's in doubt counts as a loser, because I'd rather have worse backtesting results to show me the worst case scenario than better live results instead of vice versa. So I do think that's a good tactic, but there also comes a point where we do that to the point that we don't believe it's true. We get kind of shell shocked where our trader right here is saying, oh my gosh, the results are amazing, this can't be true, I must have messed up somewhere. And doing so allows us never to get started, because we're so afraid that this is too good to be true that we never actually follow through with it. It's like, imagine you're out somewhere and a beautiful person approaches you and they're like, hey, you know what, you're cute, I'd love to go out for a date with you. And you're like, me? Like, no, like, why would you, this has to be a trick. Why would you choose me? Like, you're some famous superstar that is very handsome or beautiful, and I'm just me. Like, and you say no, and you miss the chance of a lifetime because, like, you don't think it's real. So, yes, it's okay to be skeptical. It's okay to ask questions and do research on it, but at some point, like, you do need to accept reality, and you should be tapping yourself on the shoulder saying, hey, you know what? I put in a lot of work to the system. I've crossed my T's, I've dotted my I's, I've looked at everything, I've tried to disprove it, right? And it still works. Instead of focusing my energy on finding more reasons that it doesn't work, how about I focus on the fact that it does work and how can I get it to work as efficient as possible? Now, with that being said, you also don't want to rush into things. So what I told the trader was, hey, you've done the testing, you've done the analysis, you've done the filter. The next part, especially if you want to grow that belief in yourself, is to put yourself through a period of forward testing or demo trading, paper trading, whatever you want to call it, or even like really, 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 really small account size live trading, just so you get that sting of losers and that little bit of joy of wins, I guess. I don't know. But what this does is, if you think about backtesting again as proving your hypothesis right, the forward testing, the demo trading, this proves the practical application. This proves that the thing that you believe does work, and not only does it work, but it also works in real life. My kid the other day was watching a thing on one of the Mars rovers, like little rovers they send up into Mars, and they were talking about the development of that. And right, they have all these computer models, and they plug it in and they test it and they run the computer simulations, and it works. But just because it's on a computer simulation doesn't mean it's going to work in real life. So at some point, they also have to drop this thing on like real life things. So they'll take it to a mountain or they'll take it into a desert and they'll drop it to make sure it actually works. And when you have the computer simulations and the data running correctly, and you have the real life application running correctly, like the test runs, then boom, you know you have the best chance possible of having it worked. Although, what I learned was that only half of the rovers, they have this weird, like, it's called the 7 minutes of death, where it's a 7-minute window where they lose communication and they have no control over it. Only about half the rovers that have been launched to Mars actually work, which is interesting. There's another movie where we watched where it didn't really have a good ending. I can't remember the name of it to save my life, but it was about like I don't want to spoil it, but America was getting a missile sent towards it. And I learned that there is a less likely chance of shooting this missile out of the air than what I originally assumed. I don't know if it's real, but I assume like if a missile goes in the air, we launch our things, we shoot it down, boom. And they were like, well, we kind of do that, but it doesn't always work. And if it doesn't work, so the main takeaway that I would like you to take away from this is not just the fact that we have to have belief in ourselves. It's good to kind of want to disprove things, but at some point we have to accept things and move on if we ever want to get to the point where we're trading it and actually making profit from the market instead of real profit, not like pretend backtesting profit. That's one. The other lesson that I learned, to keep in mind, this is coming from Caveman Akil, who is horrible with technology, but it's another way that AI can be beneficial to the average trader or the average person, right? Obviously, this trader right here is using AI to dig through his backtesting numbers and see the things that will help benefit his strategy. There's another trader on our platform who learned how to code, right? I'll bring up a chart again for you guys, but we typically teach ATR-based stop losses for a stop loss for a trade. Let me get off the minute chart. What you're doing is you are finding finding the average true range. You are taking it, you are multiplying it by whatever your multiplier is, and then you're either putting it that much above your level of resistance or candlestick formation, whatever you value in a specific trading circumstance, or under it. So needless to say, it's a lot of math, right? The process of entering a trade, and imagine this on a lower time frame, is I got my trading signal, and then, okay, got to find the ATR. Okay, got to find the candle that I'm putting the ATR above. Okay, got to do math, right? This can take, maybe 15 seconds if you're quick, but 15 seconds on a minute chart, that's an eternity. If you're not good with math, it takes even longer. So what he did was he made a simple code. He used AI to code and build an ATM where his deal calculates the ATR stop for him. So once he has a trade, boom, push button, and it just gives him a line right there. Boom. Using AI to become more productive, more efficient, but not take away from the human element of trading. So it's cool, so cool to see our traders kind of entering that realm and helping each other kind of find these things and sharing it. That's the cool thing as well, right? If one person does it, guess who doesn't have to do it? You don't have to do it. You just say, hey bro, can I get that code so I can plug it in? And it's just incredibly cool kind of mastermind feel. So it's just I love seeing it, and it's really changing my opinion on the different way that AI can help traders. Speaking of helping traders, something you can do to help some other traders is leave this podcast a rating or a review, or hit that like button if you're watching on YouTube. The more of that we get, the more these platforms share, the more it shares, the more traders we impact, the more traders we impact, the more questions I get, the more questions I get, the more cool episodes I can make for you. So it directly benefits you to do it, see? Anyway, I hope you enjoyed the show. Until next time, plan your trade, trade your plan. Take care.